Let's start off with Safaricom, because it's a company that's been equally aggressive in its organic and acquisitive growth strategy, but that's facing competition from many other service providers since those 3G license fees were lowered. What's your take on Safaricom at the moment?
I think Safaricom's strategy is to deepen its data volumes from its current customer base, and it does have the largest customer base at 12 million shillings, but there's been a bit of competition with Bharti Airtel actually coming on board, and we know from their past businesses in India, they're very aggressive, and they also focus on the lower end of the market. And also beyond that, we have on the fixed slash the data segment of the sector, we have Orange Telecom having been given the stake of the government on the Seccom fiber optic, meaning that it has access to a larger bandwidth in terms of the fiber optic, and it's able to actually deploy this onto the fixed lines in Kenya, which are about 260,000 households. So I mean, it's one of those where Safaricom is trying to actually add value to its current customer base, and we are seeing it coming on board with transformative products. For instance, the M-Kesho product, the convergence with Equity Bank, giving additional services in terms of microcredit and microinsurance. And what this does for them, it enhances the stickiness of its customers and helps them stay afloat, at least in the midterm to the short term, as it figures out what strategy to take as increased competition comes on board.
Well, we'll be taking a look at implications for Equity Bank in just a bit. Before we do, the fact that we've got this company really boosting its muscle in the data area, though, to an extent impedes on Acess Kenya's space. So let's take a look at implications as you see it for Acess Kenya.
Acess Kenya operates in the high-end bit of the market, and Safaricom is actually on the lower-end bit of the market. So Acess Kenya has the skill, it has the knowledge, and it has actually been able to penetrate the premium market. So that's definitely working for them, because it's the ideal service provider for the corporate, for the local corporates. But we've also seen Safaricom coming up with strategies and trying to offer the same. But in my view, I think the product offering is more inclined towards the SME market segment, and not so much into the corporate, the large corporate segment. Probably it's a build-up for Safaricom to get into that segment. I don't know how it's going to look like. We'd probably have to have one of those discussions with Safaricom to elaborate on that. But from my analysis of this, Acess is on one end of the pyramid and Safaricom is on the other end of the pyramid, focusing more on the SME sector, which in my view are the people who are going to drive the economy of this world. And with its expertise in its retail marketing, it's definitely going to be able to strengthen its data volumes on this market.
So really no threat to Acess Kenya just yet. As you were saying earlier, if there's anything Safaricom has taught, it's that when competition heats up, you start leveraging off synergy. So let's look at exactly what it's did with Equity Bank here. It's done that via mobile banking specifically. Equity is trading at around about 22 shillings 75 at the moment. What's your view on where Equity Bank is sitting on its growth curve? Because we know that for the longest while, it's been on a very steep growth curve.
For Safaricom, as I said earlier, what the convergence does for them, it enhances the stickiness of the customers, meaning your loyalty to Safaricom is sort of extended, because you can't just wake up and leave. You have money transfer services, you have access to credit on using your Safaricom line. So that's what it does for Safaricom. But what it does for Equity Bank, it gives them a new set of customers and a new set of products. It's able to offer microinsurance. It already has an insurance agency. It's able to enhance its microcredit, enhancing the access to banking facilities. Currently, 22% of the adult population can access banking facilities. What Safaricom, so the Safaricom Equity Bank convergence is able to do is push this to slightly over 50%, given the fact that at least 82% of the adult population can have access to a mobile phone. Then additionally, what this does for Equity Bank is recently the Central Bank of Kenya gave the green light for agency banking. It's already released regulations for the same. It means that Equity Bank can be able to leverage off the existing agents of Safaricom who've already been vetted by Safaricom, and use this to actually enhance its retail business and sort of push its retail business from its banking halls into the agents. And what it gives them an opportunity to actually upscale its business and now focus on providing banking services to the SMEs and building relationships and essentially essentially sort of giving it a now curve, I mean an additional upside curve in terms of the potential landing that it actually can bring on board for this year.
Well, talking about focus, if we look at another player in that banking space, Barclays Bank, as I mentioned earlier, it sold its custody business to Standard Chartered as part of its Africa-wide deal. What are you making of its Africa strategy right now?
I think its Africa strategy is definitely to be the number one, or at least play within the number one to number three, top three players within whatever market segment it actually operates in. But globally, its strategy is more focusing on the corporate businesses, because this you're able to do volumes and you can be able to negotiate margins and also offer additional services in terms of the integration within other African countries. But I think for the local business, it's focusing on growing its corporate book. It's been a bit less aggressive on its lending, and it's actually put up a new system which is definitely going to enhance its efficiency. So we'll definitely be seeing efficiency gains, operational gains coming on board to the bottom line this year. And I think, as you said earlier, the special dividend has definitely supported the run on the stock. I mean, this is a stock that was trading at about 58 shillings less than a month ago, and it's now at 66 shillings. So the dividend yield on this stock is definitely going to take an upturn, because currently it's at 3.8%. And of course, if you're a customer with Barclays Bank, instead of putting your money into a fixed deposit, you're better off actually buying the stock and getting a better yield on the stock exchange, as opposed to putting your money into a fixed deposit with the bank.
Well, Mbithe, we're going to have to leave it there. And of course, we have got the market eagerly anticipating numbers out of Barclays Bank, so we await those.